Perfect, I'm alive. Hello, good afternoon, and welcome to this MTD webinar for taxed clients. We'll be talking a little bit about some of the quarterly updates coming up this April, and we'll also be looking at how you can actually solve the challenges coming up with the quarterly tax reporting. So we'll be looking at tracking software, spreadsheets, essentially looking at whatever you need to do. We'll cover how you need to do it, and also by when. So let's jump in. A little bit of an introduction from my side and from Joe. I am Arj, one of the founders at Taxed, and have been supporting clients at Taxed for the last 5 years. And prior to that was working with Joe at kind of PwC together. And our aim really is to make tax easy using technology. And I hope just by the end of this webinar, one, if you're impacted by MTD in April 26, 27, 28, two, what you need to do if you are impacted, or if you're not impacted, how you can get ready. And three, I hope as well you realize that MTD is not going to be that bad. It's hopefully going to be quite simple. And for all of you on this call, you're already taxed clients, so you know how to file using software. So hopefully it'll be a smooth transition. And just before I pass over to Joe, just to add in terms of housekeeping, if you do have any questions, feel free to post your questions into the chat. I believe it's on the right-hand side as we go through, and we'll be able to answer questions as the webinar progresses. We want it to be interactive, so please do ask any questions and we'll try and cover it off. We do also have some time at the end for a Q&A. Thank you. Pass over to Joe to introduce himself too.
Thanks, Arj, and good afternoon, everybody. It's great to be on this webinar today. I think from our perspective, this is quite a big one. Making tax digital is very nearly upon us, and we're seeing lots of activity now and questions from people. So really hoping that this is going to be a useful session for everybody. Just a quick intro from me. So my name's Joe, and I'm the tax lead, and that involves me kind of working with clients largely on a personal tax perspective, really, just ensuring that people file their self-assessment tax returns accurately, and now, of course, at this stage, helping people to get ready for MTD. Also do quite a lot of work in terms of helping people plan and structure their tax affairs as efficiently as possible. So, we'll talk a little bit about some of the elements that we can support with, maybe somewhat separately to making tax digital. We'll just touch on that towards the end, but looking forward to getting into it.
Perfect. Thank you, Joe. Let's then jump into a bit of a quiz to kick things off. And if you've been to one of our webinars before, you'll know we love to start things off with a little bit of a quiz. So please do scan the QR code on screen, use your smartphone, or you can go straight onto the internet and go to slido.com and use #taxed. To jump into the quiz. Now, if you are watching this on a recording, you may just want to skip ahead a little bit, or you can watch the quiz. Obviously, it's not going to be the same interactivity, but you will still be able to view the full webinar. Just as people are joining the Slido on screen, quick question there from Brent. Do you get the presentation at the end? Yes, you will be able to get the presentation at the end. We'll be able to share some of these details afterwards. Perhaps minus the quiz. Anyway, first question on the quiz, just a little bit of a warm-up as people are joining on screen, is if you could travel anywhere in the world, where would you go? And I guess this is just a little bit of research as well for myself, just to try and plan some holidays for later in the year. Australia, Thailand, Japan, Ecuador, Dubai. Awesome. We've got an entrance on the chat as well. We've got a bit of Maldives, far away. I want to get as far away from HMRC as possible. Perfect. Nice. Now let's jump into the main quiz itself. So we'll start to jump into some of the MTD questions. You'll be asked to add a name here. You can add a name in here, and then that will enter you into the quiz. For those of you also that are also using the chat, you can also scan the QR code on screen, and that will enter you into the main Slido. Perfect. There's still time to enter the quiz. So if you are on the chat, you can still scan the QR code on screen to jump in. But we'll jump into the first question about MTD. So the first one is just around how many tax filings. So as you may already know, we're moving from an annual tax filing, but there's going to be a number of new filings that need to be made if you come under MTD. So is it 1, 4, 5, or 6? Now, before we show the answer on this, it's worth noting that this is one of the biggest tax changes in the UK for over 20 years. It was actually initially introduced back in 2019. That was when it was meant to come out. But there was some delays, and then COVID obviously hit, so further delays. But we'll see what answers we get from everyone on screen now. Let's have a look. So the actual move is to 5 tax filings. I know it's a little bit of a trick question. So you've got 4 of the updates, so every kind of quarter, but there is an important end of year submission as well. So you file on a quarterly basis 4 times, and at the end of the year, you file your end of year submission. Very similar to what you're already filing the end of year self-assessment to. Perfect. Let's check out question number 2. So who is brought into MTD from this year, April 2026? And we will be covering a lot of the actual theory in a bit more detail, but hopefully this gives a bit of understanding as well throughout the quiz. So is it A, is it for individuals with over 50K qualifying income? Is it B, over 30K qualifying income? C, over 20K? Or is it D, everyone? Now, just in terms of this question, we'll be looking a little bit more in terms of what qualifying income actually means. There's often a lot of questions in terms of what actually will go into qualifying income. But let's take a look at the answers here. So in terms of April 2026, we're actually only looking at those with over 50K of qualifying income. So that is your gross rental income or your gross self-employment income if you're a landlord or self-employed, or if you might be both, it's that number combined. And we'll talk a little bit more about those thresholds and what actually constitutes your qualifying income in a little bit. There it is. We've got the question here for the qualifying income. So within MTD, what makes up your qualifying income? Is it A, your employment income? So if you're employed, many of you may be getting your pay slips, you'll get P60 at the end of the year. Does that constitute your qualifying income? Do you have a pension? Does that contribute to your qualifying income? What about your rental income, your self-employment income, and your investment income? I think I've kind of given away the answer before this one. But let's take a look at some of the answers here. Qualifying incomes and properties in Ireland and UK. So just to answer some of the questions, so this would just be looking at if you are non-resident, so you might be living overseas, then you would only be taxed on your UK income anyway. So it would just be looking at that UK portion. So the answer here is actually the qualifying income. I think most of us have got that one right in terms of the rental and self-employment. But seems to be a decent amount of individuals on the investment and pension employment. But what's important to note here is that HMRC, when looking at when you enter MTD, is they're not going to be looking at employment income or pension income or investment income. They're only going to be looking at your gross rental and your gross self-employment income. Now, I know that everyone on this webinar has already filed their 2024-25 tax return. So a little bit of homework would be to check that tax return, see which kind of bucket you fall into. If you filed with us at Taxed, as many of you have, we would have automatically sent you an email with which MTD threshold you fall into. Perfect. I think this is the final question. What are the key parts of MTD? You can select more than one. Is it filing the quarterly updates? Is it keeping your records? Is it C, the end of year submission? Or is it D, paying HMRC quarterly? We'll give everyone just a couple seconds to get their answers in here. And this is it's a common question that we get from clients is, do I need to pay HMRC on a quarterly basis? And the answer is no. The key elements are just to file your updates, your income and expenses, to keep the records, and the end of year submission. Paying HMRC on a quarterly basis is not required, at least at the moment. The payment schedule is going to be the same. You pay off the kind of balancing payment when you do your end of year submission by 31st of July. Sorry, not July, by 31st of January, and then you make your payments on account in Jan and in July. No need to make any payments with the quarterly updates. Of course, that could change in the future, but for now, no payments. Last question, can you type in your quarterly updates? Now, this is, I think, a big change actually when it comes to MTD is how you need to use software to file your updates. My question with that is, can you just type in your quarterly updates? And just as we jump into this one, there's just a question here in terms of, this seems to be more for individuals, personal income, and limited liability companies do not qualify for this threshold. That is correct. So we're only looking at individual income. If you have a separate limited company, limited companies are not going to be coming under MTD. And actually HMRC announced, I believe it was at the autumn budget last year, that MTD for corporation tax has been abolished, has been like, they're not going to be looking into it.
Probably just worth adding as well there that I don't think the UK has a concept of LLC, limited company. Yes, there's an LLP in the UK, which would be a limited liability partnership. Partnerships is another thing, right? If you're actually under a partnership, we might touch on this, but then you also wouldn't be under MTD. So partnership income is another example of income that's not included.
Yeah, thanks, Joe. Perfect. So just going back to the quiz, can you type in your quarterly updates? So it's a little bit of a mix here. 46% saying yes, 54% saying no, and the answer is actually no. You can't type in your quarterly updates. The only caveat to that is if you have a 000, just nothing to actually update in a particular quarter. But in other cases, you can't type in your quarterly updates. What HMRC are looking for is a link between where you do your bookkeeping, where you've got your records, the quarterly update, and HMRC. So we'll talk a little bit about how that works in kind of practical terms, showing you a bit of a demo. Also, congrats on the quiz. Nicely done. Perfect. So let's jump into some of the actual theory of MTD now. And we'll be able to take more questions as we go through this part. I'll pass over to Joe to look at the qualifying income.
Good stuff. Thanks, Arj. Yeah, so I think within the quiz there, we've touched on some of the elements that we're going to talk about probably over the next 3 slides now. And I'm going to just kind of pad out some of the key elements. There's some good questions coming through that will hopefully kind of get answered throughout this section as well. So let's just start with those numbers that we can see on screen there, which is basically they're the thresholds, right? So this came up in the quiz, but in year 1, the threshold for MTD is obviously 50k, dropping down to 30k, then 20k in year 3. I think that much is probably obvious, hopefully for most people now. But what's probably going to be more important really is, then I can see there's kind of a question on this, but it's defining your qualifying income, which we've touched on, but also what's the measure for actually whether or not you're caught by the threshold? Is it a projection? Are you estimating to be above 50k, or is there another measure which we'll kind of touch upon? But I just wanted to just very quickly sort of emphasize the definition of qualifying income, because it does come up a lot, and I do think people are a little bit uncertain about this one. And I think the quiz probably showed that a little bit. But the qualifying income is quite literally, and I think we can't emphasize this enough at this point, but it literally is just your self-employment income and or your rental income and any other income type that you have at this stage, right? Because unless HMRC change the rules, but any other income type that you have can just be completely ignored for kind of looking at that threshold. So we mentioned investment income, standard employment income if you're on a payroll, capital gains, dividends, interest, partnership income, all of that stuff can be, and pension income, just completely ignore it. And if you're somebody who is self-employed or has rental income, they're the only numbers that you need to be looking at and concerned about. And it's gross, as you can see on the screen there. So this is before any expenses are kind of deducted. So if you're self-employed, your net profit figure, you might be able to take a fair amount of expenses. Same with your rental income. That would actually bring your taxable profit figure down to maybe a lower number that could be below the threshold. But actually, it's the gross figure. So it's very important that you're looking at your gross income before taking any expenses from that. But I think an important question, and I think Rahul has asked this question around if you expect your income to be in 25, 26 or 26, 27 onwards, I should say, below or above 50K, does that mean you're in MTD? So I think the real kind of thing that I want to make clear here that it's not based on any type of your own projection. So I'm sure there's people that have kind of got their spreadsheets and are looking at this and saying, oh, based on everything, maybe for 25, 26 or going into 26, 27, I'm going to trip over the 50K threshold. So am I within MTD? Well, in short, the answer may be that no, you're not, because what it's going to be based on, and as I just kind of touched on in the quiz, is your most recent tax return that you submitted. And so when MTD kicks off from the 6th of April 2026, at that point, although I'm sure there'll be some people that file very quickly, at that point, the most recent tax return that anybody could have submitted will have been the 24-25 tax return. And that's like the literal measure that HMRC are going to look at to determine whether or not you're in MTD. So if in 24-25, your qualifying income was above £50,000, then you can expect to be under MTD and will need to make quarterly submissions from April 2026. HMRC should reach out to people. If they, we wouldn't necessarily rely on that. We are expecting that they will write to people based on tax returns, but that's not always necessarily going to be the case. So do proactively contact HMRC. I believe you can sign up on their website now and stuff like that. So something to check maybe for people. Arj, is there any questions that you wanted to pick out there? Because I know there might be a few that I can see some that have come through.
Yeah. Just in terms of that question, if your income is expected to be lower, that as you mentioned, Joe, you would then be mandated in April 2026. But if your income reduces to under 20K, for example, then you've shown 3 consecutive years of under the threshold, you could then be taken out of MTD. So there's a bit of a time period where you have to showcase that the income is lower than MTD thresholds. If you qualify for that, then you can be taken out of MTD. But because the threshold gets a little bit lower every year, unless you've sold multiple or a few kind of properties, or you've almost brought your self-employment down significantly, likely still be under MTD. We will go over the question in terms of the spreadsheet reporting when we do we'll do a bit of a live demo to cover that. And nice, all good.
Good stuff. Okay, fine. So if we just flick to the next slide, Arj. So let's say you've kind of determined, or HMRC have reached out to you to let you know that you will be under MTD. What do you need to do, right? So we will obviously talk about how you do this and stuff like that. But firstly, there's kind of 3 things here that HMRC, and again, it came up in the quiz, but 3 things that HMRC is saying that all individuals impacted by this will need to do. So we say there you have to use a third-party software as well. So this links back to Arj and the quiz where you can't kind of type in the answers, and that links to the whole thing around that. HMRC is saying that you need to use a software in order to make these submissions, so you can't do it kind of via HMRC. So that's probably the first thing. But in terms of how HMRC are framing this, individuals will need to submit quarterly updates. And so obviously, that's probably, hopefully, the obvious one, right, in terms of the big change and the big shift that we're seeing. And as we said, that's going to mean that there will be 5 touch points, 5 submissions with HMRC, because you will make 4 quarterly submissions throughout the year on sort of a live basis. and then at the end of the year or after that, you would do your end of year submission, which we'll sort of come to in a moment as well. Individuals will also need to keep digital records. So I think this can be a bit of a confusing one, but what that really means is that on a monthly basis, really, not just through your quarterly submissions that you'll make through software. In practice, HMRC want individuals to keep digital records. Now, I'm sure probably a lot of people are doing this, right? Spreadsheets, digital receipts, bookkeeping software, which we'll talk about, would all tick that box for digital records. But I think what HMRC really mean by this is that they want to see a big shift away from reliance on paper and non-digital records and stuff like that. So it wouldn't necessarily be enough to just make a quarterly submission. If that's based on paper, that then every quarter you're kind of funneling through onto a spreadsheet, there may be a bit of a gap there in terms of the requirements potentially not being met. So HMRC actively want to see that. And then, as we've said, end of year submission should be finalised by the 31st of January. So for people that file self-assessments, this is effectively going to replace that. So on the end of year submission, which will obviously be the fifth submission at that point, that is a reconciliation, and that is where you would bring in all of your other kind of income types and reconcile the tax position, any reliefs, etc., etc. And so it links back to that point around where when you're making the quarterly submissions, you don't pay any tax through those first 4 quarterly submissions. All the tax would kind of be paid, as people would do now, at the end of the year in effectively a lump sum payment rather than quarterly tax payments. So hopefully that helps just to frame in terms of like, okay, what do I need to actually do? What does it mean if I'm affected? I think on the next slide, we've got a bit of a timeline just to kind of talk to you about what it's going to look like for the next 12 months, really. So just on this, so as we know, right, MTD kicks in and becomes effective as of the 6th of April 2026. It's important to note really at this point that other than really registering with HMRC and maybe kind of getting prepared, you don't actually need to do anything, in April. No submissions are due. That will just be the beginning of the first quarter. That first quarter will end on the 6th of July. So that will be the end of quarter 1, 6th of July 2026. And then effectively you'll have 1 month and 1 day in order to make your first quarterly submission to HMRC. So that will fall on the 7th of August. So for this first quarter, you're probably going to find that actually, right, people need to be prepared for this and get all of this sort of stuff in place and whatnot. But actually actively making a submission, you may not need to do that until the summer, right? And then, as we can see there, we move on to, that pattern will continue, and then we get to March 2027. That will be the end of the final quarter. You'll have to make sure all quarterly submissions will have been made at that point. And from then, you'll get 9 months to file the end of year submission. So that will take people up to the 31st of January 2028. So hopefully that helps in terms of the timeline. Penalties for late filing, as you can see on screen there. So there is a penalty regime in place that HMRC have kind of put together for this, not based in the same way that it would be for self-assessment. So for self-assessment, if you file that late, we typically see an automatic £100 penalty that can accrue. For MTD, it's going to be more of a points-based system, and I believe, Arj, correct me if I'm wrong, but it's going to be like 4 submissions. If you miss 4 submissions, and I think initially HMRC are going to charge £200 penalty. There is more detail than that. I'm sure as time goes by, we will be able to share, information and whatnot. But there will potentially be penalties for not filing quarterly submissions.
Yeah, I guess in year 1, there's a little bit of a soft landing as well. So no penalties in year 1. So if you do miss late filing this year, a quarterly update this year, nothing to worry about. Just make sure that it's rectified. Also, longer term, similar to like the speeding tickets and like the point system, if you show that there is consistent tax filings completed on time, you've got the good behavior, then your penalties, your points will be wiped.
One last point as well, probably just worth mentioning, we haven't touched on it, is non-residents. I don't think this came up in the quiz, but if you're non-resident in year 1, doesn't kind of matter what your qualifying income is. You won't need to do this because HMRC don't currently have basically the capability, shall we say, to file these submissions as a non-resident. I think we're expecting it to kick in from year 2. So I thought I'd just mention that.
Perfect. Thanks, Joe. Nice. We'll jump into some of the questions here, actually, just before we go into some of the actual how to file. When it comes to maintaining records, the key thing here is for HMRC to have, if they were to inquire, you're able to send them some of the bookkeeping, some of the transactions, and that transactions and bookkeeping needs to relate to your quarterly update. So what they want to see is, right, if you've submitted a quarterly update with income of £10,000 of rental income, they want to see how have you got to that £10,000? What's the breakdown? How have you got to that number? Same with expenses. How have you got to that expense number? And keeping it in a format on a software or a spreadsheet, and then that will feed into HMRC. Question here from jointly owned properties. If you own your property in joint names, it should be split on an individual basis. So the thresholds are based individually. So if it's a jointly owned as a rental property, then you would look at your individual income that you receive and any other self-employment or rental income. So if you own a property which is incurring, let's say, 20k per year, you would fall under MTD in 2028. But if it's a jointly owned rental property, that would drop you below the threshold at 10k each. Just a question in terms of non-residents. So if you are non-resident, you would come into MTD, but from April 2027, if you're over the threshold. The HMRC have stated that if you file with the SA 109 pages, essentially to say that you are non-resident or non-domiciled, as an example, then you wouldn't come under MTD in year 1. As Joe mentioned, it's because HMRC, I don't think they've got the technical capabilities to file that at the moment, but that's expected to be ready for next year. Perfect. Let's then jump into some of the questions that we get in terms of spreadsheets. I can see some questions here in terms of, is the samples spreadsheet available yet? And it is now available. So we'll be sharing this sample spreadsheet with everyone after the call as well. And we'll have a look through what that spreadsheet actually looks like too. But a very common question that we get asked is, can I still use my spreadsheet? And like many of you have mentioned in the comments and in the chat, you can still use a spreadsheet and you're looking forward to seeing that template. The thing with using a spreadsheet now is there must be that link, the link between where you're doing the bookkeeping on your spreadsheet and then the link to our software and then to HMRC. There's a few different options that we have created to hopefully make this an easier transition. So if you've got a spreadsheet system in place, you don't have to change anything. You can use your existing system, use what works for you. And we, as accountants, we love spreadsheets. So for us, it's really not about trying to create a new system or process. It's about having something that will fit in with what already works for you. The key thing here, though, is you can't just key in your updates. I'll show you a little bit around exactly how we can upload the spreadsheet and create that link between your spreadsheet and HMRC. So before we jump into the spreadsheet, I will need to actually share my tab. So let me share the screen and then you'll be able to see my spreadsheet hopefully on screen now. So we've got two different types of spreadsheets. At the moment here, I'm just going to show you a transaction tracking spreadsheet. This is great for anyone who does not have a spreadsheet at the moment. So as an example, what I'll be able to do here is I can type in a date for my transaction. So let's say it's today, the 3rd of March, 2026. The spreadsheet will know, all right, this is an incomplete transaction. I now need to enter the relevant information in here. So I can say, right, I paid HMRC, I paid my income tax, and it was £500, income tax. And then once I mark this category as tax taken off, it will then complete the row to say that it's complete. Now this should make it a little bit easier if you don't have a spreadsheet. You can pretty much upload your bank statement straight into this or manually track your transactions and then upload this into Taxed. as mentioned, this is great if you don't have a spreadsheet already, you don't have a system. But let's say you do have a system, you've got something in place, then you don't actually need to use that template. What you can do instead is you can use one of our templates that you can add on to your current system. So let me zoom in a little bit more here and then show you what this looks like. So we can see here, this is looking specifically at rental income. It will be the same when it comes to self-employment as well. The key things that we're looking at really is this rental amount and this number here for total expenses. And if you have a mortgage on the property, residential financial costs. So what we just need to do here is look at this row here, this kind of column, sorry, for the amount. When we look at the amount, what we need to do is connect up the amounts that we have here with where you're currently doing your tracking. So if you can see here for rental income, I can just type in equals and then connect it up to the cell that has my relevant rental income. So let's say it's in G20, I'll hit enter, and then that creates the link between our template for the summary and then your spreadsheet where you're already doing that tracking. Now, in reality, this would obviously not connect up to G20, it would connect up to the separate tab where you're doing your tracking. There's also some instructions on here which show you exactly how to use a spreadsheet and how everything works. So we'll be sending this off so that you've got access to these spreadsheets as well. So you can get familiar with them, add it to your current spreadsheet, and at the same time, you can ask any questions to us and our team before we jump into it. Perfect. And then just to go over the final element in terms of the filing, let me go back to my text window now. The final thing is really all about actually filing the quarterly update. So let's say that you've got the spreadsheet, it's complete, amazing. What we then need to do is upload the spreadsheet, right? We have to get this spreadsheet from its summary template and actually send it off to HMRC. Now, to do that, what we'll do is use this section on the taxed page, MTD, and this is just a bit of a demo, so I can have a play around. But in terms of submission, we just click. If you are self-employed, you'll see the self-employment. If you're a landlord, you'll see the rental income section. So you can select your particular income type, select that you're filing with a spreadsheet. You can upload the template in here, and this will automatically read our template. The software is designed to be able to read those two templates. So we can read that and it will tell you, right, this is what we've read from that spreadsheet. We can see rental income of 32,000 and expenses of X. That will then feed straight to HMRC. So when I press submit, this quarterly update is complete. So super easy. It's not a full tax return. It's literally just notifying HMRC, here's the income, here's the expenses, and not the full tax return. So a couple of questions I can see here from a spreadsheet perspective. Presumably the transaction spreadsheet records income and expenses. That is correct. That transaction tracking on the one by one can do both your income and expenses, and the summary template will connect up to your system that you have at the moment. Question here in terms of Quicken, can I put the totals onto a spreadsheet and upload that? I will need to look into Quicken. I presume you might be able to export as a spreadsheet and then connect that up with the tax spreadsheet. That should be okay, but happy to have a separate kind of call on that as well. So we can go through in more detail. Couple more questions in terms of non-residency, and that is confirming that that would start from April 2027. And then question here in terms of pricing. We'll discuss a little bit about pricing at the end. Our aim here is to keep it exactly the same. So the same as what you're paying for a self-assessment submission. If you pay £99, it's going to be £99. If you would prefer to pay on a monthly basis, that option is there as well. That would be at £10 per month option, including at the end of your submission. So a few different options, but our aim is really to keep it a similar price. Perfect. So that is the spreadsheet submissions. The second option is using our sister company or separate kind of brand called Kept. Essentially at Tax, we're not very creative. When it comes to tax filing, we've got Taxed. When it comes to bookkeeping software, we've got Kept. Now this is great for sole traders, simple landlords who don't need a property management software. You're looking at a finance tool, and for limited companies as well. And as a tax client, you will get an extended trial too. So it gives you a chance to trial out the two options. You can trial out spreadsheets, you can trial out the Kept option and see which one works for you. I always say to clients when speaking to them about MTD is the best option isn't necessarily the one with all the kind of bells and whistles, with all the autonomous tools. The key option, or in my opinion, the best option is the one that you will actually be using long term. So let's take a look at Kept anyway. So Kept, our transaction tracking tool, will allow you to connect up to a bank account that you have in the UK. So if you've got your rental income in a separate bank account, or your self-employment income in a separate bank account, this will easily be able to connect up and then automatically categorize your transactions. So you can see on screen here, I've got some transactions and they've all been reconciled. And you can see we are able to change the category if required. At the same time, all of this will be taken care of with the technology that sits behind it. So it will do a lot of the heavy lifting for you. And you're just able to see the ones that are still pending, still require that bit of human input. If you don't want the technology to do the heavy lifting, to run through those transactions, that's also fine. You can leave it onto manual and onto a rule-based mode as well. But Kept can do quite a bit. It can also split transactions. You can manually add transactions. You can do bulk upload. There's a lot of cool reporting that we're working on so that you'll be able to see a live health of your rental income, live health of your self-employment income. And also for those of you that are self-employed or limited companies, you'll be able to run invoices, run payroll, etc. from Kept as well. So it's a full-on, it's a bookkeeping and a finance tool, very similar to some of the traditional accounting software out there, but this is really made for the business owner, the landlord itself, rather than accountants. So this would feed directly into Taxed as well. So what would happen here is once we've done all the bookkeeping on Kept, it would feed directly into your Taxed account. The two accounts will be linked, and then you'd be able to file your quarterly updates in an autonomous fashion. We'd have everything ready for you, ready to go. Perfect. I'm sure we'll have some questions on Kept in a little bit. I can see a few questions actually coming through now. In terms of, can you connect up two accounts to Kept? Yes, you can connect up more than one account. You can also create more than one workspace. So I saw a question in terms of having some in a limited company, some in personal name. You can have one account, but then within one account have a workspace for your company, workspace for your personally owned, workspace for your self-employment. So keeping it all separate from a tax perspective. And in a similar vein to that question, in terms of holding property in both your limited company and in your own name, the threshold only applies to the properties that you own in your own name. So anything in a limited company will be exempt. And we'll talk a little bit about the property structuring in a second as well. For the quarterly updates, overseas rental income and holiday let income. So holiday let income will no longer be required to report separately as the furnished holiday lets, as that scheme has ended. There will also be a separate spreadsheet if you own overseas properties. Those need to be reported separately so that you can claim the relevant foreign tax credits. And yeah, it's just kind of kept on a separate spreadsheet, but very similar in terms of what you report.
I think maybe just to clarify on that one, Arj, foreign income is included in year one, right? So it's unlike being a non-resident, foreign income as a UK resident, that would be, you would be potentially kind of required to report that in year one.
Yeah, perfect. Awesome. So how can you prepare? I guess some of the key things is to speak to us to get that support, advice, and help when you need it. We'll be sending out, and we have been sending out, a lot of comms on MTD. So hopefully that's been helpful. But feel free to also send any questions over. But if you are under MTD and this webinar has highlighted that, or if you will be coming under MTD in the next year or two, potentially it's worth setting up a separate bank account to track your rental income or your self-employment. That will keep things a little bit more simple, and it will help whether you're using a spreadsheet or you want to use tracking software like Taxed, like Kept. You've got the two options there. The second one is just getting into the habit of keeping the record. So whether you want to use software or spreadsheets, getting into that habit will be great, and tracking some of those key dates ahead of time, and we'll be keeping you up to date as time goes on. Final part is just around reviewing the investment structure. So investment structure, if you're a landlord or if you're a business owner, self-employed, looking at how you operate. Is it worth setting up as a limited company? And we just pass back to Joe to discuss a little bit about setting up a limited company. And some of the other considerations.
Yeah. I guess before we just get to the limited companies, just a couple of other things that, right, we can advise on these areas and support, and also they may end up kind of being, we've got them there as maybe exemptions, right? Because some of these things, if they were to happen, could potentially mean that, you either don't need to make MTD, or you can kind of eventually remove yourself from MTD. It will depend on a number of factors, and these are fairly general, right? But naturally, if you're a landlord that has UK property, and you were to kind of sell those properties and exit, then that would eventually kind of mean that you don't have to make quarterly submissions to HMRC anymore. So on that point, if people on this webinar are potentially thinking about selling their property, whether or not they're UK resident or non-residents, it's certainly something that we can assist with in terms of the calculations and whatnot. So if that's something people are thinking about, then you can reach out to us on that. And it is something that may mean that you can avail of MTD. Likewise, a little bit more nuanced, this one, but if you're moving in or out of the UK, I'm thinking probably more people may be moving out of the UK, right, in terms of how this could mean that MTD doesn't apply anymore. So UK rental income will always remain taxable, right? So let's just make that clear to begin with, and that would always mean that you might be within MTD. But if you're somebody who's perhaps self-employed and leaves the UK and kind of takes your business, take your business and perform your duties outside of the UK, that may then mean that your self-employment income is actually no longer UK sourced. You're non-resident and it's foreign income, and therefore that's something that you could potentially can help people kind of remove themselves from MTD. Again, it will depend on factors and how much time you spend in the UK and other things, etc., etc. But more generally, if people are moving into or out of the UK, we have a wealth of experience when it comes to tax residency, implications of being resident, implications of being non-resident, other aspects that are totally unrelated to making tax digital for the most part, but just something to say that we can support with that more holistically. And then on to the kind of the limited company structure, right? Because we've had questions on this, and straight off the bat we can say that MTD doesn't apply to limited companies. It's a totally separate thing. It's only MTD is only applying to individuals. So we have a lot of questions from people that talk about maybe setting up a limited company, and this could be people looking to invest in property, grow their portfolios, or transfer property into their personal name, or it could be people who are self-employed and their business is growing and they're looking to incorporate their business. So just on the next slide, we have a few questions that we typically would kind of ask people because I think a lot of people would go straight to the limited company and think it's a great idea, and it can be, but it just depends on everybody's individual circumstances, and we just like to make sure that at least initially people are kind of considering 3 or 4 questions that you can see on the screen there, right? So the first one we would probably ask is, do you need the income today? Particularly probably if you're a landlord and you're investing and growing your portfolio, because if it's maybe something that you do separately to your employment and whatnot, if you can kind of set up a company and the company earns money and you can retain the money in the company, that money could be used to buy the company to invest in more property. It could be used to set up a personal pension for the directors of the company, etc., etc. Someone who doesn't need immediate access to their cash and their income is potentially somebody who is more likely to see the benefits of a limited company. It's not the be all and end all, but it's a good indicator, and that kind of links to what your long-term goals are. So if you're self-employed and you're looking to kind of really grow your business and take it to the next level, likewise with your property portfolio, if you're kind of looking to invest and buy more, then with that growth, it typically makes sense to eventually kind of set up a limited company. We'll talk about some of the tax benefits, but if nothing else, setting up a limited company is going to kind of set up it's going to create that legal separation between yourself and the company, and that is kind of good from a legal perspective, and it's going to help you, ultimately with organization of everything and tax efficiency, which we'll come to. So kind of moving on to that, right? What are your other sources of income? And again, it'll probably differ between landlords and self-employed. People could be both, but if the main time when this one comes up is when somebody's got a rental income, and perhaps they also have employment income that, say, takes them to 40 or 45%. That means that your rental income is going to be taxed at top slice, and it's going to be taxed at 40%, and you're going to see a lot of it go to the tax man, basically. So when other income sources are potentially taking you through the tax rates, again, that's when maybe setting up a limited company can be a good idea. And the one thing that we haven't really mentioned just yet is what are the kind of tax benefits and efficiencies from limited companies. And the reason why people would do this is because you can kind of pay yourself in different ways, and you have a lot more flexibility. There's a bit more admin, there's a bit more cost, but if you loan money into the company, you can take money back as a director's loan. That is tax-free income, and you can then take a dividend or a salary. So when you set up that company, there's a lot more potential planning opportunities that you can use to potentially take the best advantage of rate bands and whatnot. Just very quickly on the last one, it's probably weighted more towards landlords, but if you are going to use mortgages, the big tax benefit of limited companies is the fact that you can deduct your mortgage interest. I'm sure a lot of people on this call will be aware that from a personal income tax perspective, there's been lots of changes to rental income and the way it's taxed recently. You can't, deduct mortgage interest as such. And rental income is about to go up 2 percentage points if it's held in your personal name. So if you use mortgages to buy property, we tend to see that it makes sense to have it in a limited company, again, depending on the answer to some of the other questions that we've framed there. But hopefully that kind of helps. And what I would say is anyone who's thinking about a limited company, we offer a range of services to help you understand whether or not it's beneficial. We can review people's portfolios to understand whether transferring from personal into a limited is a good idea. People that are starting their journey, we can kind of support with, and we can provide all of those services around actually incorporating your business and stuff like that. So we're doing quite a lot of this at the moment. So if anyone has any questions or kind of like to set up an introductory call on it, then you can let us know, and we can certainly start to talk about this sort of stuff.
Awesome. Thanks, Joe. Just a couple of questions there in terms of paying stamp duty and capital gains. Is there a kind of tipping point where it becomes more beneficial? Now, everyone's will have a slightly different amount of income in the UK, different capital gain on their property, and different value on the property for stamp duty. So it will be very kind of personalized. Now, that's where maybe doing a bit of an analysis on, right, how much capital gains will there be if you did move it into a property, into a company, how much stamp duty, will that tax efficiency only start to pay off in year 3, year 4? And that might be the case. And that's where it might be a bit of an investment up front, but then over time, that investment starts to pay off if HMRC keeps things the way they are. you do need to pay stamp duty if you move property into a limited company. There are some exemptions if you own, let's say, over 5-6 rental properties. You're treating it almost as if it's a business. You're spending 20 hours plus per week. If you qualify as a business, not as an investment, there's something called incorporation relief. Also, if you own the properties with a partner, for example, then you may qualify. It's certainly very rare, and it's definitely a higher risk area, but it's something that can support. So worth getting in touch. Perfect. I think that brings us nicely onto the Q&A. And I think we've got a few questions on the chat, so we'll jump into those. But at the same time, if you do have any other questions, happy to get those answered at the same time. To start with, all sounds pretty straightforward, Charles. I can't understand the underlying thinking behind MTD. If the tax payment date remains unchanged, is it just so they can estimate likely tax revenues? I do agree. It's a lot of additional admin, but at the same time, I think hopefully it provides a bit more responsibility for us to be on that tax planning side of things, because we'll get all the income now before year end. We should be able to provide actually more tax planning tips before the tax year ends, and then hopefully reduce that tax bill when it comes to filing that end of year submission. In terms of why HMRC are doing it, I'm not suggesting that anyone on this call would do it, but a lot of individuals might get to year end and think, right, how much rental income have I had? I might just increase it by 10% from last year. And they're not actually looking at the transactions. They're not completing the bookkeeping. The number that they're reporting isn't coming from a place of that record keeping. So that's the flow and the link that HMRC are now looking for in comparison to before.
From our perspective as well, like, we think that this is actually, to look at it in the positive way, it is going to help people be a lot more organized than it is. We touched on that deadline and how everything kind of, a lot of the time, there's a massive burden on HMRC and everybody in the industry in January to get returns filed and whatnot. And I think from your guys' perspective, you actually, may be in a position where if you've only got self-employment and or rental income, you'll be able to be well ahead of that deadline, because you'll have made 4 quarterly submissions, which if you're using our software and then you're going to do the end of year submission through us, as soon as the tax year ends, you're basically ready to file your self-assessment, because you've done all of that up front in terms of managing your income and expenses. So I think there is a positive way to look at it there in terms of actually it helping people be ready to file perhaps sooner than maybe they would be in previous years. So yeah, it's been in, like we've said, it's been in the pipeline for ages, but I think it's just a lot of it is a mindset shift from HMRC's perspective.
Perfect. Question here from Jim. Am I correct in saying that if my rental income is under 90K, then I only need to input the total income and total expenditure in my quarterly submission spreadsheet? That is correct. If your rental or if your self-employment income is under 90K, you just need to report 2 numbers, your total income and your total expenses. They're not looking for a breakdown of expenses. If you're a landlord, you will also need to report your mortgage interest or the financial costs separately. So that's the only separate part there. One other thing to note, that if it's a property that you own with someone else, if it's a jointly owned rental property, you only need to report your income, and at the end of the year you can add your expenses in, as I know that it will be slightly different for jointly owned properties. I think that also links to one other question in terms of, can kept work for jointly? Perfect, yes. So kept will work for if you own a property in kind of joint names. Happy to have a chat about this, and we can hop on a call to look through how that works in more detail. This question in terms of MTD quarterly reporting. So we at Taxed are approved for the quarterly updates, and we are also approved for self-assessment, the current kind of end of year tax return, corporate tax, and companies house partnerships. For the MTD end of year, we're still just waiting on some of the APIs from HMRC. We want to make sure that everything is as complete as possible before we finalize the development on it. The plan is that we would include all sources of income. It would include employment, pension, capital gains, and overseas income, as mentioned here, including credits and deductions, like kind of pension contributions, venture capital schemes, that kind of thing as well. So the aim of it is really that it would mirror the current self-assessment process that we have at the moment, which many of you will be familiar with. Couple questions here in terms of spreadsheet. Can I start using the spreadsheet template that you are sending us, even though I won't meet the threshold? Of course, you will be able to use the spreadsheet template, even if you don't fall under MTD, still useful in terms of tracking that income and expenses. At the moment, the spreadsheet only uploads into MTD, but our plans would be in the future that you will be able to move it into your self-assessment end of year as well. Same for KEPT. If you're using KEPT, it doesn't need to just be for MTD. If you're using KEPT and you want to push that into your self-assessment, into your partnership tax return or your company accounts, that facility will be there. At the moment, it's only there for MTD, but the aim in the next couple of months is to ensure that any tax filing can be supported by the spreadsheet or KEPT. VAT is separate quarterly reporting too, so that would either be very similar to this. You can use transaction tracking software or a spreadsheet to file your VAT returns. Similar question here from Jonathan in terms of the spreadsheet. Of course, happy to share the spreadsheets. And thank you, Caroline. That's very kind of you. Hopefully the spreadsheets are good. It would be great to get everyone's thoughts and feedback as we send it out as well. Perfect. Using your app, will we still have to do an SA return, or will it automatically on the fourth quarter? You will still need to do the end of year submission. So that is one of the key things, is the quarterly updates will just include some of the business income pool, and then the state pension and any other income will need to be added on the end of year submission. So that would be the same as how you would be filing at the moment. But it does mean that the rental income or self-employment income will be pre-populated on that end of year return. So the end of year submission should be a bit easier because it's only looking at some of the other elements. We will be sharing the KEPT URL, and we'll be sharing more details via email after, but otherwise it's just kept.com, KEPTD.com. I can also add it on here. Perfect. Awesome. I think that covers most of the questions. Joe, is there any on your side?
I don't think so. I think we've got the vast majority of them.
Got a question here in terms of offshore companies and tax efficiency. We can certainly support. Worth just getting in touch with our team, and we'll be able to set up a call with you to discuss in more detail. We do help with filing accounts for offshore companies. They have a separate reporting service, and the advisory element for that too. 3 properties and personal name to move to a limited company might be a bit tricky. 3 properties most likely wouldn't be able to.
What we can do on something like that, Kate, is we can review it and look at the numbers in terms of what we sort of touched on it, but what your potential capital gains and stamp duty exposure may be, because we've done a few of these and actually it ends up maybe in some cases, not always, but it's not maybe as high as people are expecting. You don't have to move all 3 either. There could be a hybrid approach where we identify one property that's actually quite cost effective maybe in terms of those initial costs. So just because we're saying that you might not kind of get the incorporation relief doesn't mean that it's not worth exploring.
That's a good point. Good point. Perfect. Thanks, everyone. I think that's everything that we've gone through. But if you do have any other questions, we know MTD is coming up soon, but also a very hot topic, and there is a lot of questions. So feel free to get in touch with us. We're more than happy to help set up kind of one-to-one calls or showcasing KEPT, things like that. More than happy to help. Thanks, everyone.
Thanks, guys.
Appreciate the kind messages as well.